You're watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions, Sanelisiwe Tofile from All Weather Capital, Rowan Williams, Nitrogen Fund Managers. Be sure to send your questions through email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gents, thanks for the time today. The question I've had a ton of this morning, UnitedHealth, Warren Buffett buying, everyone very excited. Rowan, I got two questions, I suppose. Well, I got thoughts. It probably wasn't Warren, it was probably Greg Abel who's taking over. Secondly, I'm always worried that just because Buffett drops a couple of billion, which for him is petty cash, we should worry. Does it sort of up your interest as UnitedHealth, a stock you've ever, it's been under massive pain. Rowan?
Yeah, it certainly has. Look, you've done very well following Buffett's moves. And that company in particular has had a really torrid time. There's sort of the allegations of over billing and misservicing, mispricing, all quite negative. So, and interesting, you saw it had quite a big weighting in the Dow. The Dow was underperforming relative to S&P, which is quite an unusual phenomenon. So, look, healthcare is still a major growth area in terms of aging and morbidity and the services needed for that. It's a very complex environment. Obviously, there's a lot that the US government pays for as well. So I assume they've done their homework and understand it. I personally don't really like it because of the sort of highly regulated nature of the industry and the sector, and I guess the potential for sort of these sort of health-related issues and social issues related to it. So it's not one for me, but it'll be interesting to see how it pans out.
Yeah, regulation's always something I worry about in this sector, and I don't know where Trump stands on it. I suppose it depends on the day. So, Sanelisiwe, for you, health stocks, UnitedHealth, Warren Buffett. What do you make of it? Certainly, as I said, tons of questions coming. Your thoughts?
Simon, unfortunately, my focus tends to be a bit more local. I don't know too much about UnitedHealth other than the sort of controversies and unfortunate situation around
which itself is telling.
Yeah, exactly. With the previous CEO and the likes. But to Rowan's point, look, I think healthcare, even locally, anywhere in the world, really, you really do have to navigate a lot of regulation, and that kind of does tend to put a dampener on valuations. So, I won't say it's Warren Buffett necessarily, but if Berkshire believes that, the valuations now are kind of attractive, even with all of the kind of regulatory issues, then it might be something to look at.
Yeah, I take your point, and to be clear, the Berkshire Hathaway guys know what they're doing. I take that point, although they also get it wrong. Sanelisiwe, let's stay with you. MTN results out this morning. We knew they were going to be knockouts. Some of that is the impact of the currency, devaluation of the Naira in Ghana and the like is now behind them and the like. Your take on the stocks had a spectacular run over the last 6 months, year or so. The MTN results, is there still opportunity here? Actually, I need to zoom that chart out more. I think we're pretty much at sort of almost 5-year highs. Your thoughts?
Yeah, great start to the year, easing regulatory environment in Nigeria, better tariffs causing a re-rating. Then subsequently, the results of Nigeria were very good. The results of Ghana were very good. And one or two other kind of operating geographies were actually quite good results. Today's move, I think, is two things. The SA business, or three things, I should say. The SA business also, doing not so well as what would have been expected. Perhaps people were expecting it to be weak, but I think the result comes in weaker than expected. A few bright spots, like the cash flow was better than expected, but other than that, I think it's just generally a bit of a weakish result. Market share losses, even in a declining kind of telco environment. Second thing is, I think, to your point, how hard MTN has run, I think the valuation has become a bit stretched, so you might be seeing some profit taking. And I think the third thing, there's been a lot of changes now within the SA business. It's been the underperformer, but you've got, I think the guys are saying 10 or 13 changes or something like that in terms of personnel in the SA business. So that could be a positive thing if you're kind of trying to shake things up, but I think that magnitude of changes might introduce a bit of uncertainty. So I think people taking profits, bit of a mixed result, SA week, good run that it's had so far this year. It's a good level, I think, to be taking profits.
Yeah, and that level of management shake-up, I get your point. I mean, either it's inspired, but it could be messy. We'll know in a year or three. Rowan, your thoughts on the MTN numbers and even the sector? I mean, it's certainly, I mean, Telkom's had a brilliant year as well so far.
Yeah, and Vodacom's also done well.
Yeah.
So I think the market sort of, they had kind of fallen out of love with this sector, and the sort of recent performance of the underlying businesses has been better. They're sort of getting better momentum, sort of improving their returns, certainly the cash generation as well, and sort of getting back to earnings growth. So, but yeah, they have, I think, discounted now a lot of that good news, and the valuations do look stretched. Telkom also came off on their results announcement, so it shows you what expectations are. There was a further negative also in the MTN results. They announced the Department of Justice in the US announcing investigation into the Afghanistan operations that they used to have, and also Iran cell. So I think that at the margin, together with what else was mentioned, is weighing on them. And the SA OpCo is still a very large part of the business, and that sort of continues to underperform, notwithstanding all the good news in the rest of the portfolio. So it did actually look at sort of close to the 170s. It did look pretty full. I think a lot of analysts were saying it's kind of close to their target price. So to some extent, the pullback makes sense, just given the actual result on the day.
Yeah, often it's the case of sort of you buy the news and buy the rumor and then sell the fact. And now we have that fact. Rowan, let's stay with you. A moment, a question coming through. I know that the chemical sector is under massive pressure, but my sense is at some point it's going to have bottomed. Is either Sasol or Omnia worth a look, or am I missing a potential other stock? Rowan, chemicals, Sasol, Omnia, and Sasol back at 100, which is exciting a lot of people. But, I mean, don't zoom out on the Sasol chart, I suppose is the phrase.
Yeah, so the chemicals business has weighed on Sasol, and locally also been very soft. Off the back of poor demand due to low economic growth, industrial demand. So Sasol is quite different in that it is a major manufacturer of chemicals globally, and is exposed to the chemicals dynamics. It does look like China continues to increase capacity in chemicals manufacturing, so looks like prices will remain soft and I think competitive. As long as the feedstock price also remains low in the form of oil prices, that will also weigh down on chemicals prices, because it keeps prices low. So the global chemicals environment, not particularly excited about. So locally, Omnia actually has performed fairly well, and that's partly because they've got other parts to their business. The explosives business has done well, and I think the local chemical cycle can do better. They did some restructuring there to improve the margins, in fact. So that's a much easier ship to turn. And actually, Omnia is one of the stocks we like. The other one is ACI, which they're doing a lot of restructuring as well. So those two local stocks, I think, are worth a closer look at.
Yeah, I just zoomed out in the Omnia chart. That's actually not a bad chart. It's the Sasol one, which you don't ever want to zoom out on. Sanelisiwe, your thoughts on chemicals, Sasol, Omnia, either or, perhaps neither?
Yeah, I mean, look, Sasol is I mean, I think at this point for me, it's a bit of a trader's stock. You've got to be very in tune with your view around particularly oil, but to Rowan's point around, global chemicals. But it does move around with the oil price as well. I think a lot of macro and geopolitical issues have kind of swung this share around, firstly, but they've also had their own sort of internal issues around, particularly the capex and the balance sheet. So I think any new news on that front will probably help the stock kind of find a leg higher. But I think for now, you're probably going to be looking at it as a proxy for oil. And I think a lot of the geopolitics is really kind of, whipping the share around at the moment. So it becomes a bit volatile.
Yeah, there's a lot of moving parts here, and maybe some of them are better off looking offshore. So, Sanelisiwe, we'll stay with you for a moment. We had Absa results out this morning. I got to say, perhaps looking, bits of it, yes. Headline earnings up nicely, return on equity 14.8, although that is below peers, certainly Standard Bank last week. Cost to income 53.2. Here's a company that's had a bit of a rotating towards C-suite. Is Absa of interest to you, or are there better banks in the sector?
Yeah, look, good result, albeit well guided. I think the earnings come in and around the mid-teens guidance they were giving. I think obviously boosted by a bit of a sort of low base in the previous year. I think you've got a good improvement, which you're seeing across all the banks around the credit losses. So supporting earnings is the kind of the reduction in credit losses, which is a function of, I guess, the improving local environment. So yeah, good result. The valuation is certainly not demanding. I think it's below price to book now, maybe 0.9 or something like that. So whenever you're buying banks in and around 1x price to book, you maybe not certain to make money, but highly likely to make money. And then I think the other thing to mention with Absa, as you say, revolving door of managers over the past couple of years. But I think there's good optimism around Kenny at the moment. Coming from a banking background himself, he's strong on CIB. But I think his main focus will obviously be fixing the retail business. And on the call this morning, they have kind of made some overtures around what they're planning to do on the retail business and trying to gain back some of the market share. So I think it does screen cheap. And I think there is some value here, and obviously the result itself is supportive.
Rowan, we don't want to step on your stock pick, which we'll get to later, but in a minute before break, your thoughts on the Absa numbers?
Yeah, I think they were solid. As Sanelisiwe said, they were as expectation largely guided. So I think it's a kind of work in progress. It's always had for a while it's had a poor rating given some of that management uncertainty and sort of under delivery in certain parts of the business, the retail business in particular. And it does look like they are slowly turning that ship. So if they can continue with this momentum and continue to improve, get the ROE up, they're targeting 16%, that implies quite good earnings growth from here. And we see positive impact from the leadership changes. I think the market's view of the business will improve and the rating will go up. So if you're getting a situation where you've got good earnings growth with an improving rating, that will result in a good dividend yield, overall a good return. So I agree, I think there are good returns still to be had from the share price at these levels.
Yeah, Rowan, the other set of numbers this morning, and we're in that point of earnings season. Thungela, we know it was going to be a horror show. The trading update told us the coal price. It's just when you're a single commodity miner, it hurts. Is there anything, is this a stock to still be holding, or is this something really you only hold it if you are starting to think that coal prices are going to move massively higher in the short term?
Yeah, so it is a single commodity play, and as you mentioned, coal prices. So, and to some extent, they are priced off the oil price, energy prices, and the cost of energy. So, we're seeing that weighing down, and I don't think the prospects are not particularly good. Although I think the coal price is not going to move much lower from here, so it's reached an equilibrium. It looks like with Thungela, the coal price, and obviously you can see that was well understood, and what was disappointing is actually the bottom line, in that the costs came in higher than expected, and that's why the profits were so low, and so that's where the market was disappointed. They did indicate that they're still on track for full year guidance. So if you believe that they can achieve that, and there is a decent dividend that was slightly higher than forecast, actually, notwithstanding the earnings miss, that, it could move a little bit higher from here, but you do have to have a positive view on coal prices. And I think that sort of speaks to global growth, industrial demand as well, and just given the tariff uncertainty, it's hard to see. So I agree, it's hard to get excited about coal stocks.
Sanelisiwe, can you get excited about a coal stock? When this got unbundled from Anglo, it was terribly exciting. Hit market at about 20, got north of 200. Can you get excited about it at this point in the cycle?
I think I share Rowan's sentiments here, and maybe the only thing, maybe two things I'll add to that is that both China and India, being one of the key export markets, have shown indication of increased local production for coal. So that's kind of always going to put a dampener on, coal demand from the offshore markets. And I think one of the other dynamics that was probably a bit difficult in sort of the current period and the past couple of periods was that obviously a lot of demand for energy generally comes in during the kind of northern hemisphere winter, which I think this past year tended to be a bit milder than expected, and the expectations I think are probably for another mild-ish winter coming up. So that kind of puts a dampener on energy demand in that key period. So outlook probably not looking so great for sort of these energy players.
Yeah, and I was wrong. It was actually north of 300 shortly after lifting. Never mind 200, but that was a number of years ago. Sanelisiwe, we'll stay with you a second. Question coming through. I have Advotech and Stadio. Am I being silly having both? Is there an argument, or should I perhaps get rid of one, or maybe even both? Your thoughts on this? I mean, we've got a nice little education sector. Advotech, Stadio, would you look to hold both, or I mean, is there a point where it's a case of they both meet the requirement rather than sort of picking one?
Yeah. So I think Stadio works because it's a bit of a pure play on tertiary. I think there's a clear path here with regards to the demand for tertiary education. You see a crop of matrics coming through every year, not being able to fit into the traditional universities. So there's a good amount of demand. Advotech does obviously play in that space as well, but they also have a very highly cash generative and very stable schools business, K to 12 as they call it. So that is also something that Advotech has going for it, and it's been a sort of strong performer over the past couple of years. So I think there is a case to be held for both. We prefer the pure play of Stadio just because of the clearer sort of growth prospects. But I think both shares are in a bit of a purple patch in terms of education at the moment.
Rowan, for you, and of course we're kind of ignoring Kiro to a degree, but your thought on the education space?
Yeah, so that's interesting. You mentioned Kiro because they are really in the primary and secondary space, and as Sanelisiwe says, the tertiary space is where the action is and the growth is. So by holding both Advotech and Stadio, you sort of have a tertiary tilt, and I think that is the right way to play it. We quite like Advotech at these levels. They came out with their trading statement. Earnings look like they're going to be up 16%. It sort of looks like a historic P of 13. So you're getting the business at a peg of less than 1, which just looks quite attractive because we think that mid-teens earnings growth is sustainable for some time into the future. They have been, Advotech in particular, been expanding into Africa education as well, private education, and I think that has got a lot of potential and growth. So just on valuation grounds, I think Advotech is screening a bit more attractive for us here.
Yeah, and as you say, they'd move into the rest of the continent and doing it carefully, not doing what many do and go and lose a fortune. Rowan, staying with you, I'm looking for a REIT with some good yield. Can your expert panels help me narrow it down? Rowan, a local REIT with some good yield?
Yeah, so the yields have been quite good. They obviously get priced a bit off a bond curve, and the South African bonds have done really well, and so the REITs have also done very nicely. If you're looking for a pure South African play, a bit of a turnaround to some extent, Redefine is quite interesting because it lagged a little bit the other counters, maybe a bit more exposure to office, which has struggled to sort of gain traction post-COVID, but they are sort of restructuring their portfolio quite nicely, and I think has sort of better potential in terms of growing distributions, just in terms of restructuring, and the South African economy picks up and demand sort of stabilizes for commercial property. I mean, Growth Point's always very reliable as a counter, but they're all pretty good. Resilience good, Fortress is good. So you could do maybe a portfolio if you want to spread your risk across a few of the counters. That's probably what I'd recommend.
Yeah, as you say, a bit of a diversification never hurt. So Sanelisiwe, for you, a local REIT?
I think I'll go the other side of where Rowan's gone with the larger ones, and maybe mention a couple of the smaller ones.
Yeah.
Tibu and Vukile come to mind. Also, in our view, quite good management who are able to manage some of these smaller, outlying operations where a lot of the likes of ShopRite, for example, operate in those areas, and they tend to trade quite well. So they do very well in those smaller outlying areas. So if you are, let's say adventurous, those are some options to look at, which are also providing a good sort of yields and options for your portfolio.
Yeah, and we're in the sweet spot. A decade ago, the yields were low, the prices were at premium to NAV. We're now in the other way around, which is how we much prefer it. A quick question, Sanelisiwe, Karooooo, I've done well. I got it ahead of the NASDAQ listing. Do I hang on? I see that the CEO founder, Zak Calisto, was selling a fair large slice. I'm not too stressed by his selling necessarily. Sanelisiwe, Karooooo for you?
Unfortunately, not one I follow closely. I do recall, looking at, one or two telematics businesses before, but it's not one that I follow too closely, unfortunately.
No, fair shot there. Rowan, have you got insights into Karooooo with all the O's?
It's certainly been a fantastic performer. I know the investment community was concerned about the liquidity of the stock.
Yeah.
I think part of that selling by the founder, Zak Calisto, was just to look to sort of realize some liquidity. So I think you can't read too much into that. The business has got a lot of momentum. Got a good rating given that dual listing in NASDAQ as well. So that was a clever move on behalf of the management. We think there's better value in maybe some of the local players that have exposure to that space. Altron, I guess, is the one that would come to mind. They're also seeing great momentum in that business. And for us, it's a bit closer to home. Understand the business a bit better, so that would be our preference. So maybe take some money off the table if you've held Karooooo and diversify into other local operators.
We've got to go to stock picks, but quick before we do, Rowan, your point around not stressing the director sales, and I get you, this was particularly around liquidity. I, as a rule, don't stress director sales. I mean, if every board member sells everything, different story, but we had a Standard Bank exec selling 5 million on Friday. I mean, did you take much cognizant of it as a rule? Did they come through every so often?
Yeah, so I agree with you. You like sort of run-of-the-mill sales and management realizing, some of their shares after a good share run. Nothing untoward. I agree. Diversifying their portfolio, probably what the advice they get from their financial advisor anyway. But if you've seen consistent sales, from a number of core directors, sort of, for a period, you would take note of that. You've got to balance it. But I think reasonable, run of the business sales, nothing to be concerned about.
Yeah, no, fair shot. We'll leave that there. Let's go to some stock picks. Aaron, you're going with FirstRand.
Yeah, so we have seen three of the local banks, report. Nedbank a little bit less exciting, Standard Bank good, and Absa reasonable. I think FirstRand's lagged a little bit, just given the whole commission saga around the UK motor finance. That, to a large extent, I think has been resolved in terms of the liability is much more understandable, and it is lower than I think the worst case that the market was pricing in. We haven't seen the share price recover. You're getting a good entry point, and I think the results will be reasonable. It's a strong franchise, and we are still quite positive on South African economic growth in the next 2 years, and the banks tend to be a good beneficiary. So you're getting a quality player at a reasonable price at a good point in the cycle, and that's why we like FirstRand here.
Yeah, and I like the point. We've seen results, and it tells us FirstRand, perhaps the best of the breed, tells us what we can maybe expect from them. So Sanelisiwe, REIT.
Yes, REIT. Bit of a special situation at the moment. With the recent transactions that they've done, around 80% of their NAV is now sitting in cash. In fact, the cash portion, or the cash proxy portion of their NAV is, at a per share basis, is actually higher than the listed share price at the moment. So you're actually sitting with a bit of a cash shell here. There is obviously an option that they might do some M&A or put something back into that portfolio. But as of now, we are expecting a meaningful shareholder return. You're getting a discount right now, around 30% at the manager valuations, but it's in excess of 20% if we take into account the offer for the PIC core business that they've got. So good margin of safety there. So I think you get good optionality out of REIT in the near future.
Yeah, and I like your point. You're almost buying cash at sort of discounts, if they're assuming that PIC sale happened. That's all for Stockwatch today. Thanks to our guest, Sanelisiwe Tofile from All Weather Capital, Rowan Williams, Nitrogen Fund Managers. Up next, The Close. Stay watching.